And I think my objective is to cover some information beyond just Bitcoin itself. We're gonna go through some discussion on cryptocurrencies. This is a new animal, and this is Bitcoin about digital currency. So I think we all need to at least understand what it is so that we don't get victimized by it for sure. Come on in. We just got started.
Thank you.
We want you in the front row. Again, we're going to go through a quick discussion on digital currencies, cryptocurrencies. There's a lot of buzzwords. I'm sure you've heard things like digital currencies, cryptocurrencies, Bitcoin, stable coin. There's a lot of different phrases used. I'll try my best to navigate what these things, what these labels are, because they all connotate different things, for sure. And I think to get started, crypto, that's the moniker that's been put on digital currencies. And just to give you some context, it takes us back to a reference to something that's discreet or out of the sight of the public. It's something that's more hidden or secret. And I think this has been the label that was attached to digital currencies. And I think there was a reason for that. But I want to at least give you that context that it started out in 2008 and 9 and started with the circulation, the innovation of Bitcoin itself. That was the first cryptocurrency that came into the marketplace. And I think the reason they put the moniker crypto on it is the simple fact that Bitcoin itself uses cryptology, cryptography to prevent the fraud, to control the currency itself, to control the asset itself. And what that means, cryptography is, if you were to define it, it's a phrase reference to puzzles or something that's a kind of a puzzle or some kind of a clue. And you have to solve that clue to initiate the advent of the new Bitcoin issuance. And so it's centered on cryptography, and that's how the innovators of this Bitcoin use it to control and prevent fraud and to control the supply of Bitcoin. These puzzles, these things that need to be solved are very complicated, and it requires a lot of technology for those that want to endeavor to issue, to be a part of the issuance of a new Bitcoin. And because it's fairly complicated, these puzzles or these kind of things that need to be solved, it kind of segregates who's going to be involved to make these issuances of these coins. It really puts it into a different context. Now, the second thing I would describe to you is that with Bitcoin, if we use that as all over the globe, actually, to be a part of this decentralized process to facilitate transactions and to see Bitcoins issued. And so if you think in terms of the three aspects of Bitcoin, it uses I can't pronounce it right. Cryptography, to control the Bitcoin supply. It uses blockchain as the basis for the process, and it uses miners spread throughout the world to control the ledger for how these transactions are recorded. In terms of the various digital currencies or cryptocurrencies, there's been over 7,000 currencies, 6,000 currencies have been issued since the advent of Bitcoin itself. So it's early stage, it's a new innovation, and there's been a lot of different types of digital currencies that have come to the marketplace. People trying to establish themselves with their version of Bitcoin in some way, shape, or form. And I think the analogy I would use is when the first gasoline-operated automobiles were manufactured back in the early 1900s, and that was the craze. It was a new innovation that hit the U.S. There weren't 3 or 4 car manufacturers. There were 3, and it took the marketplace and time to sort out who the survivors were, and that's what's going on right now with Bitcoin. It's early stage with digital currencies. It's all early stage. It's still going through the evolutionary process, and there's going to be a sorting out in the marketplace. Will it actually have permanence, these digital currencies? And if it does, which ones are going to survive, which ones are going to go away? we've actually seen over 1,700 fade and go away. So we're going through that kind of early stage. And if you look at my last bullet, in the last 13 years, we're going through this kind of classic phase of when you have some new disruptive technology. And when you have that, you're going to get wild swings to the upside and wild corrections or price points to the downside. And that's what we're observing in Bitcoin right now. It's early stage, and it's as a result, it's really volatile as the market looks to adopt this yes or no kind of attitude with this digital currency. The other fact points I'd make about Bitcoin, the U.S. government so far has defined it as a commodity, and it's regulated right now by the Commodities and Futures Exchange. That's the regulatory body that's overseeing it. The U.S. government has defined it for tax purposes as an asset. Sell Bitcoin, when you do your tax returns, you're going to look at it as it might in relation to a property, and that's how the government's going to tax it and has been taxing. In fact, for those of you that do your own tax returns in this last year, the IRS is prompting you to answer the question, did you own any digital currencies, yes or no? Because they want to try to get identification of who's buying this and who's selling it. And I think it's one aspect of making sure that there's a taxation applied to it at this point. And the other thing I would mention, Bitcoin itself, it was the first digital currency, the first cryptocurrency that came to the marketplace 13 years ago. If you think about how well has it been adopted or how substantial has it been adopted in the marketplace, recently the price of Bitcoin was north of $60,000 per coin. The aggregate value of all the Bitcoins took it north of $1 trillion. So that's, I think, one measure of adoption that Bitcoin has attracted enough attention that it took an elevated valuation that was north of $1 trillion. And if you think about it in terms of a comparative, over the last 8 or 10 years, one of the really interesting disruptive industries has been the electric car industry and Tesla. And Tesla's gotten a lot of news, and the Tesla stock's done quite well. Tesla stock has not reached $1 trillion yet. Its high watermark so far is around $670 billion. So Bitcoin has surpassed what Tesla has done on a market capitalization basis. The other context I'd give you is gold itself, which has been around for centuries, if for millennia. It's been around 4,000 or 5,000 years as a store of value. Gold today, based on what we know as known supply, has a valuation of about $11 trillion. So Bitcoin has a valuation that's been assigned to it in the marketplace that's about 1/10 of what all the gold value is right now as we know it. So that gives you some idea about where in the capital markets. I'm going to pause. These are just background facts to get us ready for our discussion, but are there questions anyone might have about some of these facts that I've laid on the screen here for you?
What exactly started Bitcoin?
It came to the marketplace in 2008-9, and it was based on a paper that was written and published under a pseudonym. Who wrote it? It might have been a person, or it might have been a collection of people. They used as a moniker for that paper a Japanese name, but no one knows exactly. But no one knows actually who wrote it. And one of the things I keep speculating on, is it a person or could it actually be a foreign government that wrote this? That's the thing I keep asking myself, because no one knows. Maybe someday we'll find out, but so far no one has any idea as to how this originated. It just came into the marketplace. It's amazing how far it's come over the last 13 years and what it's sprouted. It's sprouted a whole disruptive.
And it's basically backed by nothing.
Well, again, when you say
except for the miners.
Well, let me try to walk you through the details of that to try to give you a sense. The one thing I agree with you on, it doesn't have what I perceive as an intrinsic value. When you look at gold, like a gold coin, the measure of intrinsic value would be if you melted down that coin, it still has industrial use. So it does still have value in the marketplace. You could sell it as a piece of gold. With Bitcoin, there isn't that intrinsic value. And it's somewhat, the comparative in my mind in that regard would be the US dollar. The US dollar has value because the government says it has value. And it's a fiat currency. There's nothing backing it. It's just it's a fiat, and so we all embrace and subscribe to it because of our faith in the government. But there's nothing intrinsic behind it as well.
Excuse me. Is this bought and sold like a stock? Like a piece of, like a stock or a bond?
I think it trades like gold, and we'll get into this in my presentation. But the way I look at it is that it has a recorded value, and people buy and sell Bitcoin every day in the marketplace. In fact, if you look on CNBC, they quote what the U.S. dollar is trading in relation to the euro, in relation to the Japanese yen.
Mhm.
They also show it today, the U.S. dollar in relation to Bitcoin.
So you can make your profit.
I'm sorry.
You make a profit.
Well, they show that when they translate Bitcoin value into U.S. dollar, they reflect it on the screen at least like a currency, and the relationship changes over time. And today I think it's trading around 40,000 per coin. But it moves so fast that who knows where it is today, but it's trading around 40,000. It had been as high 2 months ago at 64,000. A week ago or 10 days ago, it touched a low of 30,000. So if I use the phrase volatility, this thing is volatile right now. And I attribute that volatility that it's still early stage and the market's still sorting out its embracement of Bitcoin and the other currencies. Now, you might ask the simple question everyone's asking: what is Bitcoin? Is this an investment? Is it a stock? Is it speculative by nature? Capital Guardian, an investment firm, I read their report over the weekend, and I thought this might at least give you some insight as to how others are trying to describe Bitcoin. And Bitcoin, if you boil it down to the basics, you go through a linear thought process. In the marketplace, if we want to think of it in terms of currency's got three main purposes. It's used for a medium of exchange when we do business in the marketplace. It's a store of wealth. That's how when you work, you get dollars put in the bank, and you've got the compensation of labor, and it holds your value there. The third thing is that U.S. dollars, for example, help to define value for other things. And I think Bitcoin, and in doing so, that's the purpose of currency. Currency object, or is it something that's through fiat? What Capital Guardian described, and I agree with this, that Bitcoin, if you were to look at it as a type of currency, it's more of an object currency. It's more like gold. You've got gold and people assign value to it. You've got Bitcoin, people assign value to it. Whereas you've got over with government currencies, you've got fiat, and that's basically full faith in the U.S. government. The issuer itself is described as public, and the comparative is public versus government. This is not an issue. This is not a currency that's issued by any central government. It's issued by the public itself. And the process and the protocol for issuance goes through the simple step that anyone can get involved. If you got enough technology at your fingertips and you get into the program of doing the mining for Bitcoins, you can be an issuer of Bitcoins. And Bitcoins are mined and issued at the pace of transactions and how these miners work to bundle these transactions. So it's a public form. It's publicly issued. It's not being issued by the government. And it's within the control of the public domain. The technology, if we think of it in terms of central versus decentral, this is a decentralized technology. And I'll show you some graphical pictures of how I central versus decentralized it. Basically, through this mining process, the information for these Bitcoins and the support these Bitcoins provide for transactions is dispersed through the mining audience all over the planet. On average today, it's been estimated there are 1 million miners involved in Bitcoin. And these miners are around the globe. 60 to 70% of these miners are in China. If that gives you a sense of where the real effort's been made to be a player in the Bitcoin marketplace. So that gives you at least some notion of what is Bitcoin. You've got not one bank, one centralized ledger where you have your money. You've got your information dispersed in a private manner through these 1 million miners who are part of the decentralized ledger. And they're the ones that are the processes for the information. And then lastly, for classification, it's not e-money, it's not central bank money, it's cryptocurrency. It's not a commodity currency like gold, it's a cryptocurrency. And that's how they walk it through. It's an object, it's not a fiat, it's public, it's not private, it's decentralized in terms of how it functions, and it's a cryptocurrency. It's not a electronic money, it's not a commodity currency like gold or silver might be thought of. So that's maybe one way to think about it. I don't know if this helps, but I thought this might be at least one way to kind of linear fashion come to terms with what is Bitcoin. Let me swing into the blockchain technology, and I tried to give you some idea of what Bitcoin is as a digital currency. Let me describe to you how blockchain works, so you can see what the foundation is for how Bitcoin trades and works. Blockchain exploits or takes advantage of a single distributed database that is dispersed amongst all the miners. And anyone in the world can view the balances and submit transactions at any time. But the ledger is controlled not by one central entity. It's not the government. It's not the Union Savings Bank. It's not an insurance company. The ledger is dispersed. The information ledgers, the transaction information is dispersed in multiple locations. So it's decentralized. So when you do a trade in Bitcoin, I want to buy a car from Tesla in Bitcoin, that transaction information set is dispersed to everybody. It's not at the bank where you have to have your private information and they serve as a hub. It's spread all over. And if you think about it, this might be the bank, this might be the insurance company, this might be Morgan Stanley, the brokerage firm. You have your account, you have all of your information, you have your assets deposited there. When you want to buy and sell something or move money from you to someone else, you have to go through your entity, your bank, to get it over here. And so there's a kind of a hub arrangement. And I use the analogy in my mind, like when you fly in the airlines, you can fly direct from New York to LA, or you might have to go through a hub. You might this might be Atlanta. You go New York, Atlanta. That's kind of how money's moving around. It's moving around today in the traditional sense through these hubs, and these hubs are the banks, the insurance companies, the U.S. government, these entities that have your information, and they affirm and give permission for these transactions to occur. In a Bitcoin structure through blockchain, this is how it looks. It's meant to allow John to go straight to Jill. It's meant to go on a direct basis, and the permissions are done through all of the miners. And when the miners get permission, money goes direct. It doesn't go through one central hub. It's on a direct basis. So it's a decentralized kind of structure around it, and it doesn't require permission from a bank to move money. Once your credentials are affirmed, your discrete credentials, it moves.
Quick question on ransomware. Some people have said that if we eliminated Bitcoin, ransomware wouldn't pay, so it would go away.
A lot of news about ransomware, and I could probably spend 45 minutes on that alone, but let me give you, I'll try to give you the quick answer. Digital currencies, it's just not Bitcoin. Bitcoin we read about and hear about with these ransomware events because it's the most prominent digital currency out there, and it's very convenient. And when you saw me put on the first slide the moniker crypto or discrete, that's why there is this criminal element using Bitcoin when they extort money from companies, for example, because it's not money that's tracked through a bank. It's not money that the government per se should be, can see. And so there's a cloak of darkness to it when money moves around, and it allows Colonial Pipeline to move money to DarkSide, the company that was involved in the ransomware 2 weeks ago, 3 weeks ago, without permission from anyone. It just moves. As I understand it, and I've been trying to read what happened there. DarkSide is the entity that was the one that was involved in the ransom, the extortion from Colonial. DarkSide had an affiliate that wanted to go in and compromise the Colonial pipeline system, and the affiliate of DarkSide did the negotiations. They sent out a ransom note saying, "We have control of your data. We'll release that data if you pay us in Bitcoin X dollar amount." And the negotiation began. And they try to do it as easy as they can through that negotiation. In fact, they even have a service help desk to help Colonial understand how to get this done. And they make it as user-friendly as possible because they want the money as quickly as possible. Colonial paid that money within 24 hours of the ransom note hitting their desk. They didn't inform the FBI until after that had taken place. So the FBI wasn't aware of this payment till after it occurred. But from what I understand, Bitcoin is in these digital currencies, because they're kind of underground currencies, it does make it easier for these ransomware events to happen, and they're happening. It's become a whole cottage industry, and I think by a lot of foreign actors doing this, because it's easy extortion to get money out of companies. The other thing I learned in my studies of reading over the weekend is that Colonial Pipeline wasn't shut down by the hack itself, by the malware. It was their database. And Colonial couldn't guarantee that if they continued pumping oil through the system that they were going to get paid by the recipients of that oil. They had no clue if they were going to get paid. Colonial had to shut down the pipeline for that reason, because they lost control of their data and they didn't know how payments were going to go. So they didn't open up the pipeline until they understood how they were going to get paid for all this valuable oil going through the pipeline. And that was the whole game going on there. It wasn't that, the malware shut down the pipeline. Colonial was compelled to shut it down just because they didn't want to lose their assets. And the assets going through the pipe were a lot more valuable than $4 or $5 million they paid through the ransom itself. I don't think if you shut down Bitcoin, the ransomware activity goes away, because there are other cryptocurrencies right now there are other choices going on. And I think it would be just as easy to flip to another currency like Ethereum or something like that. Now, let's walk through a Bitcoin transaction to try to give you some simple understanding of that, please.
Before you go any further, just to help me. Bitcoin sounds like an idea. What is Bitcoin grounded in?
It's a digital currency, so it's like an email. It's as simple as it's just zeros and ones. You're going through the internet system, but it's got an assignment, and it's like a serial number. And so when people transact in Bitcoin, each coin has an identification, and it can be divided even. You can use one Bitcoin for a transaction. You can use 1/100th of a Bitcoin. You 1/100,000th of the Bitcoin, so it's easily divisible. It's just a form of transacting. It's a medium for how people can buy and sell things, and it's because people are assigning value to it. What is it? Is it something physical? It's not physical. It's digital. And I'm using the phrase digital currency because all these things are digital right now, and it's not hard paper money. But most of our economy here in the U.S. doesn't run on the hard paper currencies we have. It runs electronic. Our currency base is about 1/5 or 1/6 of the actual value of movements of money in this economy right now. So it's electronic. It's a digital, and people assign value to it like they do gold. Gold is just a precious metal. It's a metal, but people assign value to it, and that's what's going on with Bitcoin. People are assigning value to it based on their belief that it represents value. It doesn't have a cash flow. One of my big problems with Bitcoin, I'm a stock investor, and I'm used to trying to get to what I think is a fair value for something. And I model my valuation work out based on cash flows. That's what I'm looking at when I try to figure out value. There's nothing to go on here. I can't value a Bitcoin because it doesn't have any cash flow.
No.
I can't value gold really per se either because it doesn't have cash flow. I've always had great difficulty looking at gold to understand, is it overpriced? Is it underpriced? I can't orient to what I think is a fair price because gold's worth whatever people say it's worth. And so that it's the same kind of thing, I guess. We walk through the simple steps of a transaction. I'm going to use this example of Alice, that she wants to send 10 coins to Bob. So the hypothetical here is that Alice is she has a digital wallet. She owns 10 Bitcoin, and she wants to send those coins to Bob. And within the Bitcoin network. Now, how she gets started is that she uses a password, a private key that she has assigned to her, and that is the signal to the system that she's legitimate, that these are her coins, because she has a private identifier, that private key. And so she presents her message, I want to send 10 coins. She's identified through the private key. That's how they know her, and they know that that's legitimate, that that's a real transaction request that's been entered in the system. And the miners all take note of that at that point. That's how she gets into the system. Now, when she starts that, she places it into a waiting room. She says, I want to send 10 Bitcoins. It goes into a waiting room, waiting for confirmation that she's legitimate. A special participant goes into the waiting room. These are the miners. These are the people that work the process. And they're using their computers that are scattered all over the place. And this is the system. These are the people that look to affirm that she's real. They look to solve the puzzle, the question that's been put in front of them for this moment in time. If they solve that, then they're eligible to be the miner that completes the transaction and gets the coin that's issued out through the result of that transaction. Now, when they look at these transactions in the waiting room, there are a whole series of transactions sitting in the waiting room that are going to be affirmed all at the same time. That's the block. All of these pending transactions that people want to move money around in. I want to buy a Tesla, so I want to send 10 coins to the Tesla car dealership. That becomes my request in the waiting room, and that becomes part of a group of requested transactions that are going to go through an affirmation process. That's the block, and there are thousands of computers that are going through to verify the legitimacy of all those requests. They answer the question, and the computer system that gets the question answered correctly first is the one that owns the block itself and is able to take that block and attach it into the system as part of the chain of blocks. That's the whole notion of blockchain. We assemble a bunch of requests, we verify the legitimacy of all those requests, and we have a bunch of people doing it. And you have to have a majority of the people affirm that these are all legitimate requests within that block of trade, block of requests. That's when it becomes a legitimate block to be attached to the blockchain. And one entity gets to attach it to the blockchain and get the coin. That's the reward. And the reward ratio right now, I think it's like 4.6 coins per solution that's one of these miners. That's what they're getting paid to go through that exercise. And the million people involved as miners today, they're all pursuing these requested blocks. They want to solve the puzzle. They want to affirm the trades. They want to be the one that gets the reward for the affirmation process. And if they are the ones that get rewarded, they get 4.6 coins, which in today's dollar terms is, I don't know, it's about $190,000, $200,000 of reward for their effort. And that's what they're all playing for. And blockchains get affirmed about every 5 to 10 minutes. So there are a lot of things being issued in that regard. And that's what this says here. I'm going to pause real quick and ask, just in the mechanics of how this thing works, what questions does anyone have?
Do they take some kind of educational class to figure out that solution?
These are mathematical puzzles.
Yeah.
They're just highly
Oh,
complicated.
they're highly intelligent people.
Well, these are people that have substantial computing power to help them solve these puzzles.
Okay, so you can't go to school for it.
Well, these are computer people running
Yeah.
some substantial algorithms
They already have
to
the
solve the
background.
puzzle. One of the side issues with Bitcoin, they use the cryptography to be a control mechanism on the supply and to avoid corruption of the system. That it requires a lot of computing power to solve these really difficult puzzles. And when I say a lot of computing power, I read an article about a month ago that said that the amount of energy used to try to solve these puzzles across the million Bitcoin miners, that energy use on a one-year basis is equivalent to the country of Sweden's energy use. And it's using a lot of energy. And that's why when it first came out in 2008, 2009, I think people at home could do it with a server in your PC arrangement. You can't do that anymore. You need to have massive computing power to solve these puzzles, to play the role as a miner in this thing. And it drains a lot of electricity to do
I
this.
wonder who does it. I wonder who's doing it. I know
There are a lot of consortiums, a lot of groups come together to to create these miner entities. But like I said, I think 60 to 65% of these mining activities are being done in China. A lot of these are being done in Russia, but they're being done all over the world. And it's people and entities that have a lot of resources to build these kind of computing circumstances to do this. And they're all doing it because the reward is significant. And so the incentive is there for them to do that. That's what the reason why they're doing it.
If I buy a Bitcoin, can I get my money back?
Yeah, in fact, if you buy a Bitcoin, you have to go to in my mind, you have to go to a location to set up your wallet, get your private key, and you buy your Bitcoin, and it goes in your private wallet. One of the issues that we'll talk about at the end of this discussion is the security and risk around how you control your 10 Bitcoin, how you hold it, and how you protect it so that it doesn't, you don't lose control of it.
Why is Alice giving Bob 10 Bitcoins anyway?
This is just an example.
Okay, he's not buying anything.
No, it's
from
just
her.
like, let's say,
She's just giving him this.
let's say my son in Chicago needs money, so I just send him a Bitcoin.
All right, that's what I was wondering.
Yeah, it's one of those kind of things. But it's basically, it's like a wire transfer of money.
Okay.
And it's really, I just wanted to be able to walk through these stages to give you kind of an illustration of how it works. Other questions?
So Alice wants to send some Bitcoins to her friend. So she becomes part of a block.
Well, her goes into the waiting room with thousands of other requests.
In that waiting room,
Uh-huh.
are there varying prices of the Bitcoins?
Well, the only thing I can say is that Bitcoin trades moment to moment. When they secure the block, that's the price point that's utilized for that, for that transaction.
Okay.
So it's variable until they secure the block. But if you think about it, all these transactions go into the waiting room. The miners go into the waiting room. They go through a verification process of all these transaction requests to verify that they're legitimate through the capacity arrangement. They solve the puzzle, and the first one to solve the puzzle amongst that million audience, they get the reward. And they take that block of transactions and they link it to the chain of other previous blocks. And that becomes the accounting ledger for all of this.
As the transactions move into a block, is there a point where the block is quote full and then the miners start doing their thing?
They release blocks about every 10 minutes. I don't know if I don't have
For the miners to do their
Yeah.
job?
well, to keep the process going. I don't know how the protocol works, if it's defined on time or a number of transactions.
Okay.
But there's some protocol that goes on where
That makes it
the
become a
waiting
block.
room, the door of the waiting room closes. They go through all the verification, and that's the block. Now, maybe this might help as well. This is a pictorial of this blockchain arrangement. If you think about Alice and Bob, they're the green circles in this equation. Alice wants to send Bob 10 Bitcoin. The blue circles are the audience of miners, and we've only got two blue circles here, but there are a lot of them in the system itself. This to give you a sense of how it works. And then the orange blocks represent the historically completed blocks of transaction requests. The working transaction is this black block, the one that's it hasn't been converted to orange yet. That's the pending transaction of requests, and it's right now. It's with it's in the miner system. It's going through a pending process, and once it's approved, then it moves to the gold status. It becomes a link in the chain, and that's how it completes the chain process. Questions on this? But this is maybe the simplest pictorial of how I think this blockchain works, and I thought it might be useful to give you a sense of how it works.
You probably don't recommend it for retirement.
Well, we'll get into that in a minute. But the first thing I want to do is at least provide information on what are these digital currencies, what is Bitcoin, and I wanted to give you the first level kind of understanding of how this blockchain works. Everyone hears the phrase blockchain, but there's never any description as to what it all is. And so I wanted to take some time today to at least help you understand how this blockchain system works. The one thing I would say is this technology called blockchain has application well beyond just Bitcoin. And it wouldn't surprise me to see this type of decentralized ledger or accounting system employed in a lot of different ways in our economy, in our society, because I think it has great merit. I think it's an interesting new type of technology that I think could transform the financial banking system, for example. It wouldn't surprise me to see 10 years from now the banking system doing things like this, or the financial system itself. And it may disrupt that hub and spoke arrangement where we all have to go to the same bank who holds our information, gives us permission to do a transaction. It may destroy that. I don't know. That's to be seen. But I think this technology is very interesting, and I think this is something that, if any of the cryptocurrency kind of subject matter, I think the blockchain has the most likely potential of being around.
Is there like a tangible component to the blockchain? Because I've seen on television presentations where they have like a building, sort of a structure that they say this is blockchain. I don't know if that's where the energy is.
I think that's
Oh, okay.
But think about it, there are a million miners. That's really the block arrangement. All of these miners, same set of blocks that they're looking at. So instead of having one bank that holds the records, we have a million miners that are holding the records for these transactions. We have a million miners that are holding the records for these transactions on a discrete basis. And the only way they know you or I is just through our passkey. They don't know who we are. They just know the passkey, and the passkey's been properly authorized. So they know the information set in these blocks, and that's the general ledger arrangement. And that's dispersed amongst a whole bunch of people. And that's the decentralized aspect of all this. It's not one bank holding your information. It's all these miners holding the information set.
I just want, so you said, Alice wanted to send 10 points or whatever to Bob, and then once it gets approved, the miners get rewarded or reimbursed or whatever. Is that out of those 10 coins? How do
No.
you get?
No, through the protocol, Bitcoin, the operation, so to speak, issues the 4.6 coins to the successful miner. And so that's how new coins enter the system. From what I've read, it's a limited supply. There will only be 21 million coins issued. And under the protocol, they intend to freeze things at that point. From what I've read, that the pace of transactions would suggest that we have another 140 years of activity before we run out of coins. I don't know how the math works, but that's what I've read. I know that the reward ratio changes over time. When they first started Bitcoin, the rewards were like 10 Bitcoins. In today's terms, the reward is 4.6 Bitcoins. I perceive that as Bitcoin goes up in value, they'll have the ability to reduce the reward because the economics will still be pronounced to incentivize the million blockchain people to do this.
Do you know anything about what you supply when you get your private key?
What you give them? One of the things that to have you have your digital wallet. There are companies that will hold your wallet for you. My presumption is that in fact, we can get to that real quick. Before we get to that, let me try to walk through this, and then I'll get into how you might transact in it. Just to give you a sense of some of the features of Bitcoin or digital currencies, I try to capture 3 examples of the innovations that come with digital currencies. They don't apply to Bitcoin. Bitcoin does not have programmable features to it, but Ether does have programmable features to it. And what I mean by this are 3 examples of this, how you can program your money. Let's use the example of Alice and Bob again. Alice wants to transfer crypto assets, Urethra to Bob. but only after another person, Carol, agrees to that movement of money. And that takes on the perception of an escrow account. That's how escrow accounts are used today. Another example, when you put terms and conditions on Eurethium money. Alice wants to transfer her currency to Bob, but only after a certain amount of time. That's how trusts work. Trusts may have terms and conditions where money disperses after 20 years or after 40 years. So you can put terms and conditions on it based on time. The third example of Eurethium and how you can program that money. You want to send your asset to Bob, but only after Carol wins a race. It's a conditional term. And that takes on kind of the notion of a contract, a satisfaction of a contract. So with Eurethium and the other digital currencies, you can put terms and conditions on the movement of monies, and it takes on some of these features to it. I wanted to use these examples just to give you a sense that this is fairly sophisticated and kind of interesting. It isn't just a dollar. You can put terms and conditions on that dollar, going across the way to someone else. And it takes on these kind of features, which I think are kind of interesting. And maybe examples of some of the disruption coming down the road. Issues and risks. One is custody. This is your question. How do you, when you have your digital wallet, and what do you do about it? That's a huge issue right now. Some of the early adopters and buyers of Bitcoin, they got their private key. They had it in their computer system, and then they lost their private key information. It's a long serial number. They lost it. And so they got in their computer box 10, 15, whatever how many Bitcoins they bought early on, but they can't access because they don't have their key anymore. And that's just money that's gone to waste. It just goes away. And I've heard of anecdotal stories of people losing millions of dollars because they lost their key. And so that is a risk. You have to worry about your computer. You don't want your computer linked to the internet because you might get hacked. Some have it breached in that way. Some people have put their private information for their digital wallet on a laptop that they don't connect to the computer. They keep it away from the internet. Kind of a cold storage arrangement. Cold storage so that you don't run that risk. Another example is that you go to an exchange, and there's a company called Coinbase that just went public recently. It's like the New York Stock Exchange for Bitcoin and for cryptocurrencies. You can set up your account there, and they'll hold your digital wallet. They'll keep it secure for you, and they'll help you manage your private key arrangement. So in case you forget it or lose it, they can help you retrieve it in that respect. So that's one of the key things to keep in mind is how do you store these digital items, because it's basically like an email. You're trying to hold your email so you need it. Taxation, again, that's the IRS is looking at as an asset or as property today. But at some point, how the government decides they want to tax digital currencies is an uncertainty factor that you got to be with. The regulation itself, the government's kind of, in my mind, taking a soft touch to it right now. If the government, U.S. government, or if the Western economies ever decide they didn't want this to occur, they don't want these Bitcoins out there, they could outlaw it. They could do a lot of things, and I think that's one of the biggest risks is what the U.S. government and other governments might do from a regulatory point of view in this marketplace. Because at any point, the government could decide they want to stop it. Most of you are probably way too young to remember the Bretton Woods Act, when it was illegal to own gold in this country. And it wasn't legalized. You couldn't own gold until during the Nixon administration. That's when they legalized the ownership, private ownership of gold. But up till then, it was not legal. Something like that could happen here. And so this is probably one of the biggest worries I have about this whole marketplace. If the government feels threatened with their sovereign currency, do they want to just stomp on it with regulation? And that's a huge disruption that I worry about. And these are some of the other risks. I think with Bitcoin itself, you've all recognized it's a volatile asset. The price around, and that leads to some volatility. Some of the other things that I would also mention is in today's traditional structure, if you use a credit card, for example, as a way to transact, you have certain protections. If you have a credit card and someone is using it illegally, you're protected by the entities behind that credit card and things like that. So there are certain protections in today's system that don't exist for these cryptocurrencies that I think distinguish it from today's arrangement of how we conduct our affairs. Questions here? Please.
So, how does the government know how much Bitcoin